And so we come to analysis and interpretation, one of my all-time favorite topics, on the grounds that it gives me a chance to explain to the examiner, if I was a student to explain to the examiner that I understand what accounts is all about. So it has tremendous appeal and obviously extremely useful. It's extremely useful for a qualified ACCA to be able to explain with these skills what accounts mean to non-specialist users, other members of the management team or whatever it is, shareholders. So it's a huge skill and it's actually quite simple. I'm going to say something to you that you may not believe, but I would say if you get a nice big 25 mark on interpretation, let's say this June 2014, it's almost impossible to fail that question. Why do I say that? You'll be given, let's say, companies' results for this year and last year, or indeed this year, the results for your company against a rival company, and you've got to decide which company is better, or indeed whether you're better this year compared to last year. So it'll be one of the two. So let's say if you get a chance to compare something with something else, you've got to make decisions as to whether one is better than the other. So all you do is a few ratios, make a few comments, and you've got 60%. That's your starting point. Do a few ratios, make a few comments, and you cannot get less than 60%. I'm concerned with getting you up to the 80s and more percent. Okay? So it's a lovely topic, analysis and interpretation. What you need, of course, is a calculator. Certainly in the exam, it's one of the questions where you use your calculator most of all, because you're doing ratios and percentages and all that kind of thing. It's quite important to be organized and take your calculator to the exam. All right, exam relevance, idea, balance sheet, the word reserves, etc., plenty there. There's one important concept that I must not forget to mention here, one important aspect, I should say, and that, of course, is the examiner's article, How to Approach These Questions. So clearly, read very carefully. Please read very carefully. And then you have the extract from Student Accountant, some bits and pieces about why people are struggling with this topic. Probably the reluctance to write. Some accountants come into accountancy not wishing to do much writing, and so they struggle on all the written papers, which is why the audit and advanced audit, all these sort of papers are the ones that people struggle with. But because there's writing in interpretation for F7, the marks are much lower than had the examiner asked you to do some cash flows instead, which is mainly numbers, of course. However, this is our ratios. Almost impossible to fail this question, but we want to get more than just a pass mark. Exam relevance, as I say, question 3. If you're doing the exam in June, a quarter of the exam, and they haven't said to us for the December and onwards exams whether that proportion will be any different. Though, of course, you may be asked to do lots of small little multiple choice type questions, different ratios, etc. So it's possible that it could come up in other parts of the paper as well. So, but at the moment I'm thinking of a nice big question. Idea, most users of accounts are non-specialists. I'm sure you must underline that. I'm sure you must know that. Not experts in accounting matters, and much of the terminology, practices and relationships remain a mystery to them. So from time to time, I'm sure you and I get information through the post. Sometimes it is in numbers format, and it's very hard to understand without some guidance. Okay, so to a non-accountant shareholder, the accounts are a bit of a mystery without explanation. Our job in the exam is to try to demystify them. This is the idea. The best article, obviously written by the examiner, certainly that I've seen, and he's built in lots of examinable stuff, especially one part of that is a full exam question, where he does an answer beyond what was published by ACCA. Okay, so it takes you into the mind of the examiner, how it works, etc., how the marking works. And so let's press on, let's be efficient with our use of time. Balance sheet, basically you're acting like a physiotherapist or doctor, and you're taking a stethoscope to the patient's heart to see where the heartbeat is, whether it's strong or not. So what we're saying is the action you're taking is like some medical expert seeing what my heartbeat is. And if you find that my heartbeat is a bit lower, slower than it was, or whatever let's say lower than it was the last time you checked, then clearly, my health is deteriorating, whatever it might be. It's that kind of thing. So imagine yourself as some medical expert checking the heartbeat of a patient. The word reserves, there's a bit of a paradox, a bit of a mystery. Retained profits could be plenty, but cash could be all gone. Why is that? It's possible that to boost your revenue, the company might have decided, the directors might have decided to sell goods on longer credit. Normally they allow 2 months for customers to pay. This time they're allowing 3 months. And so what we're saying is, because they are attracting customers who find it hard to pay, the revenue of the company is high, but the money in the bank, cash at bank, is lower, maybe even to the extent where it's an overdraft. So it's a bit odd to have profits and yet have an overdraft. And that certainly is a mystery to the non-accountant, but you and I can see lots of reasons why that could happen. So this is the idea, that's the role we are playing. As we move on, we see further illustrations there. Interpretation is more important than ratios. I remember the examiner famously saying to us once, and since that time it's borne out by real questions, the ratios, the number crunching, should be up to about 8 marks. Therefore, the writing, the numerical side of it, the discussion side of it, should be 17. A couple of Decembers ago, I remember it was 9 and 16. But it's going to be there or thereabouts. In other words, it's like a 2-to-1 relationship. Unfortunately, most students behave like the fellow on the right, like the student on the right, blasting the poor examiner on the left with every possible ratio imaginable. So where the examiner says to you, please calculate some ratios and do some interpretation. Which company is better, please? Can you make a decision? Most students say, this is my great opportunity, my one opportunity to use all the ratios I've ever heard of in my life, from F3 and F5 and F7, of course, and let's just blast the examiner with every ratio I can. Let's do 25 ratios. And the examiner says, sorry, it's about 1/3 of the marks. So if it's a 25-mark question, approximately 8 marks will be on ratios. 8 to 9, that's about the norm. So be sensible about it. The writing about the ratios, the discussion, is much more prized. We then come across the famous article written by the examiner. I don't intend to read the whole of it out. That'd be a waste of our time, wouldn't be efficient. But what I can do, I suppose, is give you a flavor of what's on offer and ask you to finish reading that, read most of it at home. Okay, so I'm going to write here, essential homework reading. Essential homework reading. How to approach. Now, me, Francis, myself, I've highlighted some of the formulae, because some of the formulae are a bit debatable, you see. Some people do it like this, other people do it like that. And our examiner says, well, I prefer if you do it like... So I said, that's the only way, really. But they're very reasonable if you use a formula that you learnt, or at least that you can remember in the exam, that may be slightly different to what the answer guide does. They give you the benefit of the doubt because it just may be your college you went to, whatever. But where there's some debate going on as to which formula is better, I tend to just side with the examiner for obvious reasons. And I've advanced the dates as well. So what does he say here? So as we stand here today, it is question 3 of the exam. When December 2014 rolls along, you might have your big question, 30 marker, on something like ratios, quite possibly. I suspect it's more likely to be a 15 marker, okay, 10 to 15 marker, maybe with some multiple choice as well. So any way you look at it, ratios is going to be very, very important. So, says the examiner, performance appraisal is an important topic in our paper. It has been the subject of many past exam questions and will continue to be examined on a regular basis. Is that a broad threat, a broad hint that it will be regularly examined? The article is intended to give candidates some guidance as to how to go about doing this. Okay, many forms it can take. Vertical or trend analysis. Can you write somewhere near here as we read the first few paragraphs and leave you the rest to look up for homework? Same company. So you can read that. A company's performance can be compared to its previous period's performance. See that? Past results may be adjusted for the effect of price changes. Be careful. Price changes, I'm going to say, was examined in December 2013. The last time I saw it examined, 2013. This is referred to as trend or vertical analysis, as you can see. The weakness, of course, is just because a company's results in, say, 2014 are better than the results in 2013, it doesn't mean to say 2014 was results are good. It may be that 2013 was particularly poor, so today looks much better than last year. So that's a fair point he's making. So what's the solution? Let's try horizontal analysis. Can you write near here, equivalent company for same period as us? To try to overcome the problem of vertical analysis, it is common to compare a company's performance for a particular period with the performance of an equivalent company, but for the same period. Obviously, there's an independent yardstick being introduced, which is great. Okay, so it must be the same industry, etc. Not without criticism, though. It may be that the company selected as a comparator may have performed particularly well or particularly badly. So what's the solution to these two problems? The industry average could be used, also known as the norm. What is normal? Norm, and it's usually for the current year. So what they do basically is they get companies to subscribe, paying a fee to some central unit that has, whiz-kid computer mathematicians and that kind of thing. And they take in this information, churn it out or churn it around, and then spew it out as averages. They can't do it for every aspect of the information you've sent in, but they can do it for the most frequently required pieces of information, those characteristics. So that's one thing that does happen from time to time for your industry. For example, if let's say the accountancy education industry has a gross profit margin of 25%, probably much less than that, but let's say 25%, but our company is only making 15%, it obviously raises a little bit of a question. How come the average for the whole sector is 25% and how come we're making 15%? Something's wrong with us, you see? And it just gives you a flavor, it gives you some kind of measure to see how you fared against the average. So that's quite a good idea. It has the advantage of anonymity. You can keep these things secret as to who's in the scheme and avoids the bias of selecting a single company. Another huge advantage. So that's the one the examiner goes for from time to time. So in this article, a little later on, the examiner does a question, I think it's called comparator, past exam question, where he does exactly this. He says the norm, the average for the industry is this much, and you've made that much. What's the problem? And then he analyzes it out. Beautiful article, and certainly he has a gift of writing. Steve, brilliant writer. I often read his. I think the fascination with this topic is that the more you read, the more answers you read, the more little ideas come up in your mind, thinking, "Ooh, that's a good one. I must use that when I approach a similar question." I find that's happening to me all the time after all these years, and particularly enjoyable is this examiner's writings on ratios. He seems to understand ratios more than most people, certainly more than I do. But I try my best to improve each time I read one of his answers. He's quite a deep-thinking person on interpretation. Okay, the context of the analysis needs to be kept in mind. So can I ask you to underline that, the context, and there you must say exam. You may be asked to compare two companies as a basis for selecting one, presumably presumably the better one, for an acquisition. So let's say acquisition can be said to be the first one. Alternatively, a shareholder may be asking for advice on how the investment has performed. So shareholder, I suppose you could say, is the second one. A bank considering offering a loan or overdraft, that could be a third one. In other words, you are working for the bank, and the bank is saying, hey, with your ACC expertise, can you have a look at the results of this customer, this company's results, to see whether it's safe to extend an overdraft facility or give them a loan? Will they be able to repay it and pay the interest? That kind of thing. So it's quite a kind of an internal exercise working for the bank, who is then thinking of giving out a loan. Okay, so perspective is key. It may be that your chief executive has asked for your opinion as, say, some big noise accountant, chief financial accountant, ACCA qualified, on your company's results. Interesting. On your company's results. You see? So there are four ways. I have to say that when I look back at the questions that this examiner has set before and after this article was written, he tends to stay within those bounds. So that's a good thing. Question scenarios. Most questions on this topic have information in the scenario that requires particular consideration. A common complaint from markers is that candidates often make no reference to such circumstances. In effect, the same answer would be given regardless of what the question had said. It is worth noting there are many clues in the question. Ignore them at your peril. So can I ask you to highlight words like clues? Okay, so notice the language here, quite strong. Ignore them at your peril. If you ignore the clues, you might fail. Peril, danger, careful is what the examiner is saying. Examples. Now, here we have some very clever stuff where he weaves in accounting standards into the ratios question. So here's a collection of typical things. There's something called related parties, you see. So what he's saying is, because of these relationships and transactions, they have the potential to distort the results of a company. Related parties. For example, if you have a parent and a subsidiary, do you agree, if the parent normally sells to the subsidiary at, say, a 25% markup, so it buys goods from outside, marks it up at 25%, and then sells to the subsidiary. Okay? Now, because the subsidiary has had 3 bad quarters and is looking like it's going to make a loss for the year, what the parent might do to reduce the loss for the year, or even help the company in some way to approach profit, in the fourth quarter of the year, rather than using a 25% markup, they might say, have it at cost. Now, if you're a shareholder of the subsidiary company, you ought to be told there was a special deal with the parent. But if you're a shareholder of the parent, it becomes a much more serious issue, because the parent is the one that is at a disadvantage, who is forfeiting, giving up his 25% markup. Now that's quite deep, isn't it? IAS 24 covers things like related party relationships, but the actual IAS is outside our syllabus. But the fact that you do have these related party relationships, that is in our F7 syllabus. The proper IAS 24 comes up, of course, at P2, the next level up. So that's what the examiner is trying to say to you. Don't ignore related party relationships. Related parties could be of different types. Obviously, familial relationships, me and my brother, for example, that's a related party. But of course, in a business sense, parent, subsidiary is quite an easy one to relate to. All right, examples of related party transactions. Goods have been supplied to a company on favorable terms in terms of price and credit arrangements. You see that? A subsidiary may enjoy the benefits of head office expertise, research and knowledge without any charge being made. You see? So normally the head office or the parent charges anyone who wants this knowledge, expertise, but because the subsidiary is struggling in the last quarter of the year, they might offer it free. Do you agree that's simply a way of shifting profits around the group? Yes, which is another big issue. Loans may be advanced at non-commercial interest rates. I remember one question not long ago where the subsidiary has been put up for sale at the end of the year, but during the year, because the subsidiary is in a bit of difficulty, the parent has given the subsidiary a loan. And the question says, the normal market rate of interest for this kind of risk to a lender is 8% interest. But the subsidiary has been offered 2%. And so the keen student, the keen-eyed student, would have picked it up as a possible related party relationship. Why would the parent have given a substantial loan to the subsidiary at 2% interest, whereas had the subsidiary gone outside to get the loan, they would have had to pay 8%. So that difference of 6% harms the parent, you could say, and the subsidiary enjoys that discounted rate. So that's the kind of thing you've got to make a comment about. What else? A company may have entered into certain arrangements that mean its previous results are not directly comparable with its current results. Here are some examples. Sale and leaseback. Now we have come across that in our travels through substance over form. IAS 1 and 8. Substance. The reality of the relationship. Sale and leaseback of property, plant, equipment. Obviously that will lower the operating assets and thus improve asset utilization. Now, what do we mean by that? What does the examiner mean by that? There's a famous formula which says asset utilization is something like your revenue divided by the assets that you've used in your business. Yes, the assets that you've used this year. So you take a revenue and divide by the assets, and if for some reason that's what happened last year. You see, you took your revenue divided by the assets. For some reason this year, because of some arrangement here, you have gone and sold your property to a bank or whoever, and then you've leased it back. You still are using the property, you still occupied it, you're still there. All that's done, all that's happened is the property has left your books, and so it's no longer recorded. So when you're doing this year's asset utilization, you start with the revenue, whatever it might be, and you divide not by last year's assets, but by this year's assets. And of course, because these assets from here to here have been sold off outside the company, the assets that you're apparently using are only that much, the assets on your books. So your revenue divided by a much smaller number of assets gives a much better asset utilization result, so many times, as they say. Okay, so last year it might have been 5 times, you see. This year it might be 8 times. And people will say, hasn't this year gone so much better for the company? Actually, nothing like that. All that's happened is the assets have been lifted off the balance sheet, off balance sheet finance. And obviously that's very controversial. But that's the kind of thing we've done with our IS 1 and 8. So go back and revise that chapter 14, which is on substance over form. Entering into debtor factoring, another one, all the same sort of chapter 14. The sale of debtors to a finance house. What we're saying, debtors are receivables, of course. The article was written at a time when we had the full-blown UK stream, and so the language used is more the UK kind of stream language. So please allow for that, as I explained right at the end of the article. Nowadays, of course, it's all international. So the receivables, you see, if you were to sell some of your receivables to a bank, so some factor, say a bank, a division of the bank called a factor, so you lift your receivables out of your books and you sell it to me, and I give you cash up front. If you're doing the debtor collection ratios this year compared to last year, this year looks so much more efficient, yes, much more liquid. And is that because your credit control department has gone out and collected the receivables faster? Not at all. It's just that your biggest receivable has been sold to the bank and the bank has given you cash up front. So what we're saying is when we're making comparisons between last year and this year, you have to allow for these special arrangements. And that's where the quality mark comes from. That's why I always say to my students, if you're doing the exam, let's say this June 2014, or indeed after that, at least 5 marks, you can see here more than that, but at least 5 marks out of your big ratios interpretation question will be devoted to standards type of knowledge. And there's a good advert. Okay, what else? A general revaluation of non-current assets would lead to a higher capital employed and thus a lower return on capital employed. So what's going on here? Now in the past we've done IAS 16, property, plant, equipment, lovely stuff. What's this return on capital employed? What's the famous formula? On top you have your profit, underneath you have your net assets employed. Okay, so last year you had this much profit and you divided it by this much capital employed. This year, because you've revalued your net assets, your buildings, your capital employed suddenly grows. Yes? Meanwhile, because you've revalued your buildings, you've got to charge more depreciation. So poor old profit upstairs has had to shrink to allow for the extra depreciation. So not only is your capital employed underneath, the denominator going up, your profit goes down. So what was 44% return last year might be 15% this year. That is an exact quotation from a past exam question. And I was shocked at how different it was. 44% down to 15%. Tremendous difference. Yes, almost 1/3 only. And why is it so much smaller, the percentage? Well, there's a double problem, double whammy if you prefer. The capital employed has increased because of the revaluation, and your profits has reduced because of the depreciation on the revaluation, IAS 16, that point. Okay, it could go the other way. The revaluation could be downwards, but he tends to make the revaluation upwards in examination questions. Again, perfect material for December 2014 and onwards for multiple choice. So here's your IAS 16, property, plant, equipment, etc. What else? A company may have implemented certain policy changes during the year, lowering profit margins to stimulate sales. So when you're making your comments, you've got to say, well, I can't really compare this year to last year because there are so many changes being made this year to improve things. It doesn't necessarily improve performance, it's just a policy change that has made the accounts look a bit more pretty. See? So you've got to be a little bit sort of hard-nosed about it and say, well, the improvement isn't due to better performance, it's simply financial engineering, if you like. The possibilities, the examiner says, of what might have happened are almost infinite. But what is important is that where the scenario describes events such as those described above, you take them into consideration. Now, when I meet Steve Scott, I'm always taken by what a gentle, kind of brilliant though he is, but very civilized man, very, temperate and super guy, really. Very clear, open, gives you lots of explanations of everything you ask and so on. But one thing you can say about him, he doesn't use harsh language, but here he does. You take them into consideration. You see that? So if you don't, you're going to fail. So coming from a mild-mannered person, he does mean that. All right, so you must recognize those special circumstances. Right, what else? Most performance appraisal is based on interpreting various comparative ratios. Questions may vary in the approach, but in most questions there are some marks available for calculating ratios. Some questions will leave it for you to decide which ratios to calculate. Other questions may specify which ratios have to be calculated. However, some questions may give you the ratios such that all the marks are for analysis. Now that's when the pass rate goes down, because people can't do their lovely ratios with their calculator. It's quite rare, I must say. Most of the time the examiner makes you do some ratios. But on the odd occasion he's given you the ratios and said, you comment on it. Okay, so that's a difficult thing to do where the entire question is just discussion. Another complaint of markers is that when candidates are left to decide which ratios to calculate, they calculate far too many, thus spending very little time on the interpretation. See? A bit like the person blowing into that musical instrument earlier, or the megaphone earlier, that cartoon. Even in questions where there are marks available for calculating ratios, the majority of them, how many did you say? Absolutely. 17 ratios, 8 or 9, 17 or 16, as the case may be. Okay, so that's what they mean by that. Right, what else can I say? Lack of interpretation analysis. Let me just read a couple more paragraphs. You can read the rest for homework. By far the most common complaint by markers is that candidates' comments explaining the movement or differences in reported ratios lack any depth or commercial understanding. Such a sad statement. We're trying to become, business people. Got to have some depth and commercial understanding. I'll tell you where we've come across this kind of thing before. Can I ask you to see impairment question called steam days, a steam train, where the examiner says, let's make a commercial judgment. Yes, commercial assumption. I think there were 2 steam engines, remember? One of them was destroyed. And in answering his question, the numerical question, he assumes that the second engine cannot possibly lose value, because every time you pass by it, you'll give it a little bit of a polish, because you want it to be maintained well, because the first engine was destroyed through bad maintenance. So that kind of commercial understanding. So if you flick back to your impairment question, steam days, you'll be able to see me explaining that point. Okay. A typical comment may be that the debtor collection, receivable collection has improved from 60 to 40 days. Such a comment does not constitute interpretation. It is a statement of fact. To say a ratio has gone up or down is not really meaningful. A bit harsh, I think, because the student has said improved. You see, I thought improved wasn't too bad a word, in my humble opinion. See, the student hasn't said it's gone down from 60 to 40. The student has actually says it improved. So I think the marker should really feel it's worth half a mark. And the examiner, the markers usually give something for that. But what the examiner is saying is, we're not worried about the little half marks, we want the big marks. And to get that, what is required from a good answer are the possible reasons as to why the ratio has changed. You know what the best word there is? The most encouraging word for you and for me? The word possible. You see? That's a very generous word, the part of the examiner, very kind. There are many reasons why a ratio has changed, and no one can be certain as to exactly what has caused the change. That's amazing, isn't it? The examiner is saying, this is his words. All that is required are plausible, amazing, believable, plausible, believable explanations for the changes. Even if they are not the actual cause, marks will be awarded. There is no single correct answer to an interpretation question. Now that is the most encouraging bit of all. There is no single correct answer to an interpretation question. Imagine if the examiner said that about consolidation goodwill. Answer guide, $7,000 in thousands. Every student is trying to get something that looks like 7,000. Obviously you don't know about it beforehand, but you're doing something and eventually the marker is given the answer by the examiner and 7,000 is the answer. And so if you get 7,000, yep, you get your marks. It's precise. You must get 7,000. But notice what he says here about interpretation. There is no single correct answer. Amazing, isn't it? So had he said that about consolidation goodwill, in other words, if you get 7, that's great. You get 6, that's okay. 5.5, yes, that's fine. He can't do that. It'd be ridiculous. There is a correct answer, and we're doing our best to get there. Whereas with interpretation, there is no answer. So you can just walk along, no problem, as long as you get somewhere near, and that's fine. Okay, clearly within reason. There may be clues. Here again we come across that word. Clues that would account for some of the changes in the ratios. And then there's an examination approach. He explains. Don't do too many calculations. And a little structure he suggests. And then you have the famous formulae. So wherever he's written a formula, I've just put it in bigger writing, slightly bolder print, so that it stands out when you're trying to pick it up. Okay, so that's how the article goes. As you work through it, plenty there. There is an example there, example 1, something about preference shares. Nowadays he doesn't quite examine it in that style, but when the article was written, of course, it was important. So I've said for the current exam, don't worry about that particular bit. By contrast, doing things like earnings per share, in recent recordings I've been doing price earnings ratio, earnings per share, IAS 23, all that kind of thing. And that's why I always say earnings per share has got 3 ways of coming up in the exam. Obviously, part of published accounts, part of a standard on its own, IAS 33, or indeed through this, which is interpretation, a ratio carrying a few marks with a bit of discussion. Okay, so price earning as well. So well worth studying that article in tremendous detail. All these things have come up in the past, dividend yield, earnings yield, etc. So just read that, it's self-explanatory. Example 2 is a more demanding question where you're asked to put into practice things like the P ratio and the dividend cover, etc. Question and answer supplied. And then the essential homework, the question I was telling you about earlier, where you have sector averages, and that's the question written out by the examiner, typed up for you, with the facts given there. And then, of course, you've got your requirements, writing a report, etc. Okay, beyond that, you have the answer itself, which, like any good examiner's answer, goes on and on and on till you reach, as you can see there, the end of page, there you are, 293. Okay, so you must read that at your leisure over the next few days and weeks, however much time you have left. Page 294, formulae. In recent times, ratios and interpretation has been removed from F3 and then has been reinstated. So you will get some ratios and some discussion, I would think, at F7. Formulae have been highlighted, as I say. Now, a couple of times, which happens to be in December, nothing particularly important about that, the examiner, for example, in a few Decembers ago, an amazing question where the examiner said to you, please do this cash flow question. I think it was something like 17 marks. And no discussion, just numbers. And then that was part A. Part B said, looking at the 2 years for that company, I'd like you to, the company is called Crosswire. In due course, I'll do that on revision. Very, very good question, really searching. Do the cash flow statement for this year, for which obviously you need 2 years to compare for certain figures. Do that for this company and see if we can get the categories organized. There are 3 categories, etc., etc. I think they asked for just for a couple of them. Anyway, you do the cash flow work required, and then for the 8 marks to make it up to 25, he said, please, can you look at the facts of the question that you've just been looking at with the two years next to each other and cash flow, etc. Please look at that, and using this formula, and then he gives you the return on capital employed formula. Using this formula, can you work out which year is better? Yes, 3 or 4 marks, and the rest of the marks, discussion. And the amazing thing is the overwhelming majority, the examiner says well over 50%, with the formula provided, couldn't calculate it. In fact, the calculations did not depend on getting the cash flow statement right. It was straight from the question. So the examiner says, here's the formula, here is the P&L and SFP for 2 years. Please use the information and this formula, use it through this formula and get me some numbers, and people can't do it. And the examiner is saying to us at one of these meetings, if he didn't give us the formula, how many more people would have got it wrong? And that's a very sad thing to hear, that people are so bad in the exam, where they give you the information and the formula, people can't apply a simple formula. So we mustn't fall into that category ourselves. What else? Extracts from the Student Accountant Magazine ACCA website. Whilst the ratios scored well, the same cannot be said for the interpretation, you see, usual story. Some good and insightful answers, I hope that'll be you, particularly in the attempt to analyze the change in the ROC. It's a different question to the one I was mentioning. Far too many answers were of the type, this has gone up, this has gone down. Such comments are not interpretation. They merely reiterate what the ratios say. See? But he said there were lots of clues that should have prompted comments. So these indications are these clues, okay, that he speaks about. I'm just about to show you one of these. And an early exam, I was rather disappointed, he says, with the overall pass rate. I can't remember what the pass rate was, obviously fallen from the time before. Poor performance is mainly in those answers requiring written stuff, which is, of course, what this topic is about. And as he says, a student will not pass F7 unless they write, not just do numbers. It's a very sad thing to see the examiner saying to us, some people pick up the entire F7 paper and put a line through all the written bits, and they only do the numbers. And that, of course, is virtually a fail before they start. Or certainly if they're very good, they'll get close to the pass mark, but probably not quite achieve it. Some candidates did not attempt any of the written elements, as I was saying 2 seconds ago, and others couldn't express themselves, see? Thus, combined with poor handwriting, sometimes illegible, and question planning, despite the additional time allowance, resulted in fewer marks. So can we say you've got to write clearly and write something that makes sense, of course. I'm sure you will, because you've been doing this course with me. So it must give us a good chance. Now, I thought I'd sent to me by other lecturers in F7, doing F7, different parts of this huge company we work at, LSPF. They said for them, they'd like a list of ratios for their students. And since everyone's using my class notes, or at least that's the hope, I've repeated, I've just put in whatever they sent me, these other lecturers. It's all very, very good stuff, including their approach. There's a question called Megan, which I would like you to have a look at for homework. Is a super little question, not the examiners, but still very, very good practice indeed. Megan, and another one later called Testbury. Testbury is the one I want to do. This is a past examination standard exam question that I've just upgraded a little bit. So if I take you back to one of my earlier pages, we're looking at this on page 275, of course, this chapter 18, Analysis and Interpretation. The point I was making earlier about having a purpose, you see, I want to just bring that point home. Even if the interpretation question is easy, you must ask yourself why and for what purpose you are doing this interpretation. Okay? Why are you interpreting? And I saw this little sentence, little quotation from a philosopher. I'm only an accountant, but it's still a useful thing for us to read. No wind is fair to a man who does not know for which port he is making. In other words, if you're on the high seas, aiming for a particular harbour, yes, where you can come to rest, a port, you have to have a purpose. And what he's saying is if you're doing a ratio analysis because you want the shareholder to be told which company is better or which year is better, you've got to have a purpose. Yes? For example, you must use profit after tax for a shareholder. If you're doing this internally for a bank or for your own company, clearly you might go for profit before tax when you're doing your profitability ratios. Doing it for a shareholder, we go for profit after tax on the grounds that profit after tax is what finances the dividend. This kind of point. If you have a purpose, then you will get a better mark. Whereas most people sail around in circles, not sure where they're aiming. So you must know where you're going, as this great philosopher says. And so the bits that I was showing you just now, just do a quick summary. Examiner's article, the Testbury question, I believe, is on page 299. Megan, the page 298, there you are. And in due course, there's a question called Big Wood in the revision kit. You might consider doing that nearer the exam. But first things first, examiner's article, how to pass. Must read that very carefully. Okay, so beyond that, so whatever page it is, can I ask you to read that, please? Examiner's article, I think that's enough. The question called Megan, must read that. Beyond that, there's Testbury. I'm just about to do that question with you. And of course, there's more, another one called Greenwood, etc. Greenwood and Testbury are past exam questions. Greenwood is a bit of a watered-down version, but Testbury is a full-blown version of that question. That's the one I would like to do. Okay, so let's make a start with that. A question there called Testbury. In fact, if I give you a break at this point, we can do that on another recording. Thank you.